I'm going right live to the trading desk. Victor Dare joins me on the line right now. Vic, I'm not sure if you got a chance to hear Greg Weldon, but I know how much you like his work, and you're the one who first arranged for him to be a guest on Money Talk several years ago. I just was very interested. Right at the end, he got into the bond market and his talk about, whether the bond market had ended its bull market. And he's obviously in the camp that says yes. And I just wanted your take on it now that we've seen a little more action here.
I definitely did listen to Greg, and I'm looking forward to seeing him at the World Outlook Conference as well. And yes, I think the interest rate market is absolutely the key market to watch. And when I say interest rates, Mike, that could be what we call nominal interest rates, just, what people say, well, interest rates are 3%, or real interest rates, which are the interest rate minus the inflation rate, which gives you the real rate. Another very interesting kind of interest rate is the difference between the interest rates in different countries. And one of the things that's really supported the U.S. dollar over the past couple of years, and certainly since the Trump election, has been that interest rates in the United States are generally higher than interest rates in other countries, and all other things being equal, which of course they never are, but that interest rate advantage acts as a magnet to draw capital. So here's the thing. Back just after Brexit, we saw interest rates in the major countries around the world hitting historic lows. Since then, interest rates have started to rise and really accelerated the rise after Trump got elected until the middle of December when we had the Fed meeting. Since then, we've had interest rates kind of back up for about a month. I'm thinking, and while they were backing up, Drew and I had put positions on where we thought that the bond market had fallen too fast, and would reverse a bit. We've taken those off, and the positioning that we've done this past week is we're leaning toward interest rates are more likely to rise than fall as we go forward from here.
And the implications are huge if this is a change. I mean, this is, it might be a cliche to say it, but it is a sea change if you get this change in interest rates.
Well, isn't it interesting? We've got a sea change in the political environment at the same time. In a way,
yeah.
I think there's a real unsureness in the market right now. And Greg was really talking about that in the sense of maybe, you buy the rumor, sell the fact. We've had this tremendous reaction, in the last couple of months since Trump was elected. And my sense is people are kind of looking around right now. I mean, the stock market, the broad American market's kind of gone flat for almost 6 weeks here. But there's this unsureness as to what to do. There's clearly big changes. There's a sense, anyway, that there's big changes happening. But at the same time, an unsureness of exactly what does it mean? What do you buy? What do you sell? So I think in some respects, people just keeping their hands in their pockets. But the markets that we're going to be watching certainly will be the interest rate market because that plays through to, for instance, when gold was making its highs back in July post-Brexit, that's exactly when interest rates were making their lows. As interest rates rose, the gold market fell. As interest rates were rising, the U.S. dollar was rising. So, you got to pay attention to interest rates to give you a clue anyway as to what's going on in other markets.
I got time for one more here, and I'm going to throw the Canadian dollar at you. What's your take there?
Canada, we used the strength in Canada the first couple of weeks here of this year to add to our short positions. We remain basically bearish. I mean, when Trump's comment on the U.S. dollar on Tuesday, and he says the strength of the U.S. dollar, it's killing us. And then as Michael Levy talked about, Poloz came out the following day and said there's a lot of unknowns, but, interest rate cuts still on the table. We had Canada register a weekly key reversal down. We think there's a number of variables, certainly the interest rate differential between us and America, as I just talked about, the fact that there's a huge bullish speculative bet on crude oil, and if prices do start to slide away, those guys are going to throw in the towel, could put more pressure on crude. We think Canada's more likely to drift lower than higher.
There's so much to talk about, and you'll be there to talk about it with us at the World Outlook Conference on the Super Panel, doing lots of duties there, but your chance to come and meet Victor. Vic, thanks for taking the time. Have a great weekend.
Yeah, thanks, Mike. You too.